This is Cece. Welcome back to the Orbit. It is Thursday, November 2nd. Before the open, we've got futures higher. We're looking at the SPY chart right now, and SPY is indicated up about 1%. That is more than the 0.6% expected move. So we've got a continuation of the buying we've seen all week that accelerated yesterday with the FOMC leaving rates unchanged, which was expected, but then the market really took off during the Powell press conference. As you can see on the 1 month chart, we had that steep decline in the 2 weeks leading up to this week, and then we reversed at a level pretty much that a lot of traders were looking at, that sort of 411, 412 level. Now, something to keep an eye on as this market goes green over the last couple of days is how quickly IV has collapsed. On Friday, the VIX was above 22 during the end of that selling. And after the market has reversed this week and we've had a couple of up days, vol has collapsed and the VIX is now about 16, which is a pretty steep decline pretty quickly. It's almost as if the market is saying that year-end rally that everybody always talks about has already happened. But here's the thing, it is still only November 2nd. There's 2 months until the end of the year. So I want people to sort of watch that VIX. And there's another reason to watch the VIX is volatility can act, or short premium in options can act as an accelerant in both directions. And when you see those spikes in the VIX, that's not just a fear gauge or an indicator of fear, although it is, because it often is powered by people buying puts. But what happens behind the scenes in the market is that short gamma in the market and people buying puts accelerates that move on the downside, can cause a capitulation, but then causes stocks to quickly rise on the other side as all of those hedges and the market makers having sold stock against puts that they're selling out in the market, all of those put deltas go away very quickly and the market backdrop changes quickly. Now, with the VIX collapsing down to 16, those dynamics of that accelerant behind the market suddenly reverses. And so we may have already just seen a backdrop change in gamma, and it's something that we've covered on the Orbit over the last few months, is after expirations, the gamma backdrop can sometimes shift. And what we've seen over the last 2 expirations is exactly that, is there's been a shift, and we've seen a capitulation at the bottom after this previous expiration. And we saw the beginning of the sell-off after the September expiration. And now we've just seen the VIX go from 22 to 16 very quickly, and that changes the dynamic of the market. On that note, let's look at some of these earnings reports, because this is also interesting, especially heading into a report like Apple after the close. One of the other things you would want to look for in this sort of changing gamma backdrop is signs of it within individual stocks. And so what we've seen last night and this morning's earnings reports are kind of interesting, because you are seeing, we're looking at PayPal right now. The expected move was about 8%. It's up 7%. It's in line with the expected move. Then we look at Qualcomm. The expected move was about 5%. It's up over 6%, so a little bit more than the expected move. But then you see a couple of these, like Starbucks. The expected move was 5%. The stock is up about 9%. We're looking at Palantir. The expected move was 10%. It's up almost 14%. And then a big one here, Shopify. Expected move was about 8%. It is up 16%, so double. So you see a lot of green there. But the other point here is people may be offsides, and people raced out to buy a lot of puts in a lot of these stocks and across the market. And what you're seeing, especially it feels like over the last day or two, is traders having to recover. They got caught off sides. They owned too many puts. They were short stocks, and they have to step in and chase a stock like Shopify on earnings. Now, the reason I'm bringing that up is because that tends to happen with volatility high, or it's that pivot point you see from volatility being high to reversing. Keep an eye on the VIX because these conditions, if the VIX is, say, 14 or 15 a day or two from now, those conditions will have pretty much played out. And you will now see volatility across the board or a vol backdrop that is actually low. And so it's very rare to go from conditions where volatility is high to volatility is very low in a couple of days. So something to keep an eye on. And finally, let's take a quick look at Apple, which reports after the bell. We are looking at the chart, and gosh, that looks a lot like the SPY chart we were just looking at, and which makes sense for one of the biggest mega cap companies in the world. The expected move is very interesting here, right? It's just inside that low and just inside that high. So we've got an expected move of about a little over 3%, and that is about, let's call it 168 to the downside and 180 to the upside.